Hi, everyone. My name is Dustin Miles. Super excited to have Tony Castronova here today. Anyways, yeah, Tony, I'll pass it off to you if you want to introduce yourself, and we'll get going from there.
Sounds great. Hey, thanks for having me, Dustin. I'm Tony Castronovo. I am presently located in Park City, Utah. We'll unpack that a little bit, but that's been about 2 years now. I used to
Oh,
live
wow.
in Houston, Texas area. More or less a lifestyle change for me,
Yeah,
but I
little
still
different climates, right?
a little
Area.
bit, a little drier and a little cooler. So
Yeah, got a little bit of elevation there too. So,
a little bit more than Houston. But Houston's a great place to invest,
yeah,
and Texas just in general, all the markets in
yeah.
Texas. So I still spend a lot of time in there. My kids are still there too, at least three out of four. So uh, that's kind of my deal. And I've been in the space of real estate investing since 2014, multifamily since
Wow,
2018.
wow,
Um, Other things that I've been a part of, I'm a fractional CFO for real estate companies, from flippers, wholesalers, land developers, and of course, multifamily. I also have a coaching business called Grit to Growth, where I coach
hmm.
entrepreneurs
Oh,
to
cool.
hopefully live an intentional life by design, which I'm
Yeah.
trying to eat my own dog food, they say.
That's great.
Yeah.
Well, cool. Yeah. Would love to in where so you moved from Houston to Park City, Utah, and then did you where'd you grow up before that, or did you grow up in Houston?
So I grew up in central New York in the
Okay.
Syracuse area. Decided after a little bit of a career in construction that I didn't want to swing a hammer anymore.
Mm.
So I decided to go to school for petroleum engineering.
Oh,
So
wow.
I went south to West Virginia. And back in the day when, the jobs were starting to kind of come around and oil was $10 a barrel, the
Wow.
jobs were either swinging a hammer and being knee deep in mud in the oil field, or I could relocate to the Houston area and join a management consulting firm building software for oil and gas companies. And that's essentially what I chose. And that got me into the whole life of being a management consultant for 25 years.
Oh, wow. Okay. Got it. Okay. And then and you started, I think you said 2014 in real estate. So was that flipping houses and rentals, or what did that look like?
I did a little flipping, but I quickly learned that I really wanted to build a portfolio of rental properties.
Okay.
And so I pivoted to just buying single family homes, renting them out. Back then, just learning the whole gamut of everything. And, there weren't all these podcasts out there.
Right, right.
I
Yeah.
literally was listening to Carlton Sheets CDs,
I remember that. Yeah.
late
Yeah.
night TV kind of stuff,
Yeah.
reading books and trying to learn real estate.
I went to not to go off in a tangent too much, but I remember going to I think this is like 2006. It wasn't Carlton Sheets. I can't remember what the guy's name was, but anyways, but it was one of those they sold CDs in the back situations.
Oh, yeah.
And so, I mean, oh my gosh, the guy was fantastic salesperson. I mean, just off the charts. And it was crazy just to see, because they did such a good job. Everybody was in their seats, and I turned around. I mean, the whole room was running, literally running to go hand these people their money, and their credit cards and all that. So, anyways, it was something else. I'd never seen anything like that. But, anyways, so kind of a similar type of kind of thing. It sounds like so. But
Yeah.
yeah, smart for you because I know a lot of people um, flippers and all that. And it's, everybody, I mean, you could say the same thing about multifamily is I'm trading, potentially one job for another too, because asset management's not, it's not an easy task.
Right.
It's
Not
especially,
passive.
especially hasn't been the last few years. So, but anyways, sorry to divert there, but where so no podcast or anything like that. So where did you hear about multifamily and how'd you kind of get going there?
Good question. So for 4 years, I was in the single family space, and I started to realize a couple of things. One was I started bumping up against the like Fannie Mae number of loans before I was going to have to like either do a portfolio loan and hit the reset button
Yep.
or try a different strategy. And so it made me start questioning maybe one unit at a time is just not the way to go. And, you know,
Yeah.
I
Yeah.
had lots of processes and systems in place. And
Uh-huh.
I got to the point where, and this is a good thing, I actually think this is a gold nugget here, is I had boring real estate. And that's what I would tell everybody to do is look for boring real estate.
Yeah. Yeah.
You don't
Got
want big swings. You don't want excitement on your property.
no.
All right. So I decided to go exploring a little bit and get educated on multifamily. There was a local meetup that I just happened to stumble across. So I
Oh,
started
cool.
attending every monthly meeting and I learned a lot. And I got to be honest, back then, you started to hear about these masterminds and they were asking 20, 30, 40 grand a pop. And I
Yep.
was like, are
Yep.
you kidding? Well, I could do so much with that money
Right.
in deals. And finally, I decided to just rip the band-aid off and try it. And that was a game changer for me. Just being in a community of like-minded people that were all working really hard and the connections and the network you build. And that just springboarded not just my education, but my deal flow and started to get, really into many deals at that point and learning the ropes. And I think that just paid for itself pretty quick as far as my education.
That's awesome. That's great. And I guess kind of throughout your career, did you join any of those the masterminds or any of those or do you kind of just continue to network and grow and learn and just curious what your path looked like there.
Yeah, a little bit of both. So
Okay.
what I did was in 2018, I bought my first multifamily deal. And
Mm-hmm.
I did that without really much education and zero education on the syndication model.
Oh,
I
okay.
bought that like I bought a single family. I opened my checkbook and bought the biggest property I could afford. And I maxed out all my credit cards on rehab and
Oh,
contractors.
wow. Wow.
But it was a great deal.
Wow.
I exited that deal in 3 years and essentially doubled my money. It was all me. I didn't have investors, so that
Oh,
was a
wow.
nice payday. And I learned a ton. I learned also what I don't want to do
Yep. Yep.
because when you own a property by yourself, you take on every single role.
Yeah. It's you, and you.
That's right. That's right. So on the second deal, I still did it without being a part of a mastermind, but I did a syndication. I
Okay.
learned from a few different mentors. One turned out to be a partner. He was from Lifestyles Unlimited. I know you've heard of them,
Yep. Yep.
mostly kind of in Texas. And then I learned a lot from some folks from the Brad Sumrock group. And I
Oh,
really
cool.
thought I would join their program. I ended up going with the Jake and Gino program.
Okay.
And mostly because just the community, the culture,
Yeah.
really thought it was a good fit for me.
Great group of folks. Yeah.
Yeah, yeah. I've met a lot of wonderful people. I joined that program back in 2021, I guess it was.
Oh, wow. Okay.
So, yeah.
That's awesome. That's great. Yeah, I think it's I think you hit on a really good point there. There's look, there's a lot of really great groups out there and all that. I think it's just, you just find what, hey, I built a few connections over there, so that feels like, that's the kind of the right path for you. And so that's great. Yeah, I've heard lots of good things about if known and met a lot of really great folks that have come out of that group for sure. That's awesome. Yeah, and I was part of lifestyles, and that's kind of for me. I'd hired, um, I tried a few different mentoring groups and all that on the single family side that didn't pan out. Probably, I'm sure, some of it was, looking in the mirror was on me. It's probably a lot of analysis paralysis, especially, backgrounds in engineering. So kind of adds up, right? Anyways, but yeah, had some success through them, and to your point of I knew especially after doing few single family, I'm like, how do I get, how do I kind of build? I didn't, to me, and I have some friends that have built, or bought 30 homes and more, but to own 30 homes, that seemed like a very daunting task. And so I was like, hey, multifamily makes a lot more sense. I can go buy one or a few of those, and it's not the exact same work, but it's kind of similar. So,
They're economy
um,
of scale, right?
yeah, yeah, absolutely. In If you could kind of, I'd be, interested to hear how your first deal as the GP, how that kind of went, I don't know if what your role in it was, if it's asset management or raising capital or, a bunch of different things, but would love to just hear kind of how that went for you, and I'm sure you learned a ton. That's when you really learn. So.
Yeah, for sure. And the interesting thing about that first one was now that I had a little bit of experience in multifamily and then I joined a mastermind, I wasn't just learning from base, ground zero, but I was
Right.
learning from some experience.
Mm-hmm.
And the nice thing about a community like that is, when you're working by yourself, it's kind of you. Maybe you have a partner, but you see things just through one lens.
Yep. Yep.
Somebody can be unbiased and look at something. I remember like my first boot camp in this mastermind, and I stood up, we're introducing ourselves, and I described what was going on in this deal.
Hmm.
One of the coaches in the program literally said, "You need to take that deal behind the barn and shoot it."
Wow.
And to unpack that, and I'm glad that he said that,
Yeah.
but to unpack that, the reason why he said that, I bought this deal in 2019, in November of 2019. And
Mm-hmm.
about 2 or 3 months later, if you recall, there was this little
Mm-hmm.
thing called a global pandemic,
Yeah.
right? And
Yep.
so imagine, try to rewind the tape, what we were all going through back then. I'm taking over a property. I can't even get contractors to go in because they're not
Mm.
allowed to be out there. They're not essential workers. I couldn't fill the units up that I had rehab because my property managers couldn't be there. We had to like remotely show
Yep.
units. You put lock boxes on every unit and hope people close the door, lock the door, all these things. It was a disaster. We couldn't evict anybody.
Right.
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 So we still
Yep.
had this rough tenant base because we couldn't get rid of anybody. And that just slowed our ability to like replace those tenants with paying tenants and so forth. So it was a rough several months of
Yeah.
operate.
Yep. Yep.
Fast forward, we did turn the corner. It took a little while. We turned the corner. We got up there. Oh my gosh, like 96%, maybe even 100% occupancy at one point, and we're cash flowing and we're doing okay. Not really optimized, but we turned the corner. And at that point, just kind of looking back at like the mental toll that took on me and all of my
Mm.
resources, like my time, my money, my energy into that one property, that was like, I can't run a business like this. How am I going
Yeah.
to do
Yeah.
property number three?
Yep.
Right. So that's when I realized, okay, maybe it's a good time to exit. We exit early. We provide a return back to our investors. Maybe not, what the business plan said, but we're pivoting and we're gonna, you know, take that and run and find a property that is better suited to our management style. And that's what we did. So turned out
Gotcha.
okay. Not a
Good.
home run, but a good base hit.
Okay. Well, good. Yeah, I remember when I was kind of looking whenever I first did single family and kind of applied the same thing to multifamily, I like what you had said was, you're not looking for a grand slam or a home run. You're just, it sounds like, single or double. And that's kind of whenever I was looking at single family and I did the same thing for multifamily, I wanted something kind of close by. I didn't want like a deep value add. I wanted to be able to, I wanted to win. So kind of build my momentum, haha, kind of moving forward. And yeah, like I said, I wanted to make sure I didn't want to fail because if especially you're getting into this thing for the first time, fall on your face, like it's a lot more difficult to get back up. But if you have a win or two or maybe a few wins behind you, it's a lot easier to get back up and keep moving. So but
Absolutely. Well, I tell you, from my observation, what you've been doing, and we're obviously part of one of the Henry deals, uh, that you found a little bit of a blueprint, and you're stamping that, and a lot of similarities, right? You're not trying to reinvent
Mhm.
the wheel.
Yeah,
Similar locations, similar demographics, similar vintage, team approach, everything, right?
yep,
And
yep.
that's boring real estate, but that's what good real estate is.
Yeah, yeah. Yeah, well, thank you. Yeah, it's taken a little while, but it was, we kind of, really just started looking around at the different franchises that are out there. I guess, one that, at least is, popular in kind of the South or Texas or Southeast, but just look at Chick-fil-A or I mean, I guess you could, McDonald's or whoever, but we just we want people to have instead of or you could kind of use the analogy for football. Do you want we're running the same play over and over and over, and you're if you run the same play over and over, you're probably going to get pretty good at that play versus running, oh, I'm going to run 10 different plays or 20 different plays or whatever. And that they're very, very different. So, yeah, we've just been big believers of just doing something, trying to do it very, very well and just not, just really, kind of keep a narrow path, narrow swim lane and just stay down that path. So, but yeah, I appreciate that. Um, where with your coaching business, and I know you're a fractional CFO, and you have some other stuff going on. Would love to kind of touch on some of those. Whatever you'd like to kind of share with those.
Sure.
I know in regards to multifamily, the your educational platform there sounds I'd love to hear like what you guys are trying to do there or currently doing.
Okay. Yeah, and everything is really synergistic, right?
Hmm.
Things that I do in my businesses are not just sort of random one-offs, but they
Hmm.
all kind of have a storyline, they fit together. The coaching business, so specifically, my company's called Grit to Growth. And specifically, I coach entrepreneurs. And whether that's somebody who is working at W-2 and feels those golden handcuffs, they want to get out, do their own thing, but maybe hard to make the jump, or somebody who did make that jump and is now struggling with all the things that we as entrepreneurs struggle with, right? There's pressures socially, financially, personally, you name it. And that's what I help entrepreneurs with. The synergistic aspect of all that is um, I realize that that's where I came from,
Yep.
and it wasn't an easy pathway just to rip the Band-Aid off and jump into being an entrepreneur, making a good salary for a good company. So that was a leap of faith. And so I wanted to be able to help other people do that while I was managing assets. You don't just doing a multifamily deal every single month, right?
Yep.
So
Yep.
in between, there's a lot of work to acquire an asset. And for some people, depending on the role, there's a lot of ongoing work. But my role was primarily around capital raising. So there's a
Hmm.
lot up front, but then until you get to the next asset, there's a little bit of a pause. So I wanted to have something like my coaching business to sort of fill that void.
Yep.
All right. But then that kind of led to me working more on business coaching just because of some of the
Mm.
people that I met along the way. And they introduced me into the world of CFO services, which I kind of view a little bit as financial coaching for
Mm-hmm.
real estate companies. So
Okay.
I'm their voice of reason. I look at the numbers. I coach them through their finances on anything from
Okay.
flipping, wholesaling, buy and hold, multifamily, you name it. And I've got some other types of clients that are maybe contractors, some oil and gas, but mostly it's real estate.
Oh wow. Okay.
So that's kind of another synergy. And then the multifamily maestros is my education platform. And that I joined a partner. We decided to share our experience and build some education. So we have a complete syndicator course. We also have a passive course for somebody who's looking just to invest in a multifamily deal and wants a little education. They can go through our platform. It's all online. If they join our syndicator program, they get a weekly mentoring call with me and my partner. They're part of the
Hmm.
community, part of all the networking and everything that comes from being with a mastermind. So that's kind of what I got going.
Awesome. That's cool. On the, I guess as far as coaching and then your kind of the educational platform on the multifamily, are you is it kind of word of mouth or are you guys, I guess advertising a little bit or how do people kind of, end up connecting with you?
Yeah. So the advertising, I think, here's being an entrepreneur, right? You test things and see what
Yeah.
works, and what
Yeah.
doesn't.
Yeah.
We started growing that organically, word of mouth, our
Oh,
network,
cool.
that sort of thing. And then we started to realize that our network is just so big
Yep.
and we
Yep.
needed to do marketing. And so that's actually been a good education for us too, because we needed to find the right marketing platform, the right marketing person that kind of fits with, first of all, our price point, as well as really what we need from somebody.
Yep.
Marketing can be anything from, paying for Facebook ads, or
Yep.
it can be somebody developing your website or social media content. I mean, you name it. So
Yep.
we just had to kind of go through that exploration process. But a lot of it's been organic to this point.
Okay, good. That's awesome. Yeah, and usually, because they may already know people that are working with you, and so it's probably a stickier, type of client as well. More likely to stay with you and all that,
For
longer
sure.
term. And because usually they're very similar people, so that's great. And I guess how do you see or is that right? I guess maybe for this year is that more of the focus for you guys? More maybe a little more on the education and kind of on the coaching, or how do you see 2025 shaping up for you guys?
We're going to continue to focus on that, of course, the
Yep.
education. My coaching, I think more and more it's become prevalent because people are just running into lots of challenges right now, from
Yep.
companies they work for being downsized and being forced into something else,
Yeah.
to, people realizing that they just want to change, they're burnout and they want to explore their passion. So I work with a lot of entrepreneurs in that capacity, doing one-on-one coaching. And they come from all different walks, from, you know, like corporate America, Fortune 500 companies, to somebody who's been out there doing it for a while on their own, so everywhere in between. So that's kind of just word of mouth right now. It's more.
Okay. Cool.
Uh,
Okay.
and then the CFO business, I gotta say, is a place where I'm doubling down on, because it's a game changer for a lot of people. They
Yeah.
may have had their business for a while and maybe they're just not a numbers person. They're not really focused on reading financial
Right.
statements, or even they never had somebody to put that accountability on them to run their
Hmm.
business more efficiently. I mean,
That's
believe it or
great.
not, some people don't even have an underwriting model. They're just doing deals because they look sexy and they're just, taking on deals and maybe even losing money. They need somebody to help them to evaluate their entire business.
Oh wow. Okay. Got it. Okay. Interesting. Any I don't know if you're audiobook guy or a book person, but anything you'd like to kind of share along those lines with folks?
I do read, listen to lots of podcasts, but I think there's a book that I don't want to say it changed my life kind of thing. That sounds so dramatic, but I
Yeah.
think I was able to put it in practice, and I have a really great example. Maybe you're familiar with Dan Sullivan's books. Who
Mm-hmm.
Not How is one.
Yep. Mm-hmm.
So I love Who Not How because a lot of people think it's about delegation, right? Hey, there's all these things I got to do. Let me find somebody to do it. No, it's not
Yeah.
about that, right? There's some aspect of that, but the first thing a takeaway from there is figure out who you can be a who to,
Mm.
which will allow you to kind of sharpen what your value proposition is as a person, as a company. When people think of you, what do they think you could help them with? You
Mm.
always want to be somebody that could bring value to a team or another person. So that's one perspective to take away from the book. But the real example that I have from it is this was maybe 3 years ago. My son was like in his first year of college.
Okay.
He did not have a car. Long story. He had a car. He wrecked a car. Didn't have a car, and so he wanted my help to get a car.
Mm-hmm.
And so I didn't want to just open my checkbook and pay for a car. I
Yep.
wanted to teach him how he could be empowered to go buy a car. So I started thinking about what could be some good life lessons. How about we'll flip a house and he could take the proceeds and go buy a car or at least put a really good down payment down.
Yep.
And as I started thinking about it, we were getting closer to summertime and he would have time available. I was like, are you kidding me? I'm going to spend all summer rehabbing a house. I mean, that would take me away from everything else I have going on.
Yeah. Yeah.
And so at the time I'm reading this book and I'm like, wait a minute, I don't have to flip a house. I just need to know somebody that flips houses. And so I put together a list. I started reaching out to these people, and lo and behold, one of my who's showed up and said, I just acquired a property. We're about to acquire a property. We're going to close on it in the next week or two.
Mm-hmm.
If you want to come in as an equity partner, I can still have you put some sweat equity in. You can bring your son out, you can swing a hammer,
Oh
but
wow.
he can take the role of a project manager and manage part of the rehab process, keep control of the budget and so forth. And so I put my kid on a 10-week mentoring program with me and with my partner, and he had calls with him, and we visited the
Wow.
property. It was a wonderful experience. And at the end of it all, the final exam, if you will, was we walked into the dealership. He picked out the car. When the salesman tried negotiating with me, I said,
Mm-hmm.
oh, no, here's your customer right over here. And he and I had practiced coming into the dealership how he was going
Yeah.
to negotiate, but
Yeah.
I redirected it. And it was a huge adulting moment. Had I not read that book, that probably never would have occurred to me.
Wow, that's cool. That's super cool. Love that story. Really appreciate your time today here, Tony. And how do people get in touch with you? What's the best way to learn more? Potentially, work with you on the coaching or with your educational platform. So, what's the best way to get a hold of you?
Yeah, we can drop it in the show notes, but probably the best place would be Tony, Tony, at multifamilymaestros.com. That's my education business. From there, whether it's one-on-one coaching, whether you're interested in getting involved as an LP in deals, I can kind of drive you to the right business. But as far as reaching me, you can always get a hold of me there.
Okay, cool. Just curious, where did that name come from?
It actually came from something me and my partner Randy did with
Okay.
Flow Portal. if you
Okay.
know the portal.
Yep.
We were trying to help drive some marketing for them. And so we did it as
Oh,
a
okay.
free webinar and podcast for a little while. And then eventually we decided to kind of take it on the road and build it out.
Cool. Awesome. Very
Yeah.
cool. Well, appreciate your time, Tony, and please reach out to Tony. Super nice guy, and there's lots of I know there's a handful of people kind of in the Utah, Salt Lake City, Park City area. So, but anyways, please reach out to Tony, and appreciate your time, Tony. Hope you have a great day.
Thank you. Appreciate being
Thanks.
on.
See ya.
Yeah.
Bye.